Good morning, good evening, good afternoon, everybody, and welcome back for another The Financial Griot podcast. I always have to say The Financial Griot because I don't want you just go looking up there and not finding us the right way. Is The Financial Griot or TFG. You can definitely Google us because we're important. And if you can't Google you, then you're not that important. I'm just saying, a little bit of shade just to start us off. But we love to have this conversation about financial literacy in regards to even financial stories. And as such, we're bringing another guest to tell us about her experience and the way that she navigated through life to create successful opportunities, solve some of those aching problems that a lot of people have in order for us to actually grow and move forward. As always, I am Lawrence Delva Gonzalez, that's why I think I am. And I'm also known as the neighborhood finance guy on the interwebs. But I'm here with my other co-host, the diva herself. Lovely has showed up to bless us with her presence. She hasn't been here for a while. She's rich now, so it's different. So I don't even think she wants to talk. I have to talk to her secretary to see if she wants to talk. But I'm also flanked by my other co-host, Alanta Alsane. So I'll let her kind of say who she is and what she does because she's from Florida. Florida people are weird. So.
Oh my gosh, here we go. Just starting off the tone of TFG. What's up, everyone? Thank you so much for tuning to another episode of TFG. Like Lawrence just gave us that shady introduction. We're so happy for everyone to be tuning in today because we have a really cool special guest, Miss Monick Halm. Okay, I said her. I just want to make sure I pronounced it right. So, just another great person I met at FinCon, and she is a fellow Haitian, and I didn't even know that until she mentioned. I'm like, yes, and she just told me her story. She's out, living out in LA on the West Coast, and a real estate investor, and she does so much in terms of financial literacy, but also really encourage women specifically to tap into the real estate market and to build that wealth of knowledge and applying those practical steps in order to become a real estate investor. She has an incredible, great podcast, Real Estate Goddesses, that I really like the name of. And I think that she brings a lot of just knowledge and experience in terms of investing. But before we start off, I just want to ask Monick, how are you doing today?
I am great. I'm so happy to be here, especially with my fellow Haitians.
I know. Before we started,
relaxed. She's like, man, that's that West Coast. Like,
it's so relaxed.
It's like 10 a.m. That's what I do.
We were just talking before we started the episode. We all are hitting different regions. Monique's out on the West Coast in LA. I'm here in Florida. You have LG in DC and Miss Lovely out in Boston. And it's just like Haitians are everywhere, but the middle of America, I think. I don't know if Haitians live in middle America. I'm not sure. I saw from Chicago.
Many here in LA either.
They're not as many.
Not many of us here. Mm-mm.
Oh, okay. Yeah. Maybe the ambiguous, the mixed cultures. You never know. So Monick, you went out and attended FinCon, and to my understanding, it wasn't your first time. You attended a lot of FinCons, correct?
I've been going since 2018. So that was my fourth in person. I had just missed 2020 when they didn't have it.
Do you think that throughout the years it has changed since 2018? I'm pretty sure in terms of attendance, but when you started out going?
Yeah, there were fewer people post-COVID than there were before. So it was interesting because the last one where I met you was in Orlando. The first one in 2018 I went to was also in Orlando. It's still, though, a great conference with just amazing people. But I think especially last year was more different. So it was like 21, one of the first forays out post-COVID. Everyone was masked up. It was different. But I love that conference. I love money nerds. So it's good. It's a good one.
Okay, I'm going to still LG question over here per usual. Monique, can you just explain, so how did you end up in LA by any chance? I know you said you were from DC, correct? Raised or VA?
I grew up in DC, and my brothers had gone out to LA before. So I'm one of four kids. I have two older brothers and a younger sister. And my brothers had gone out, and they'd actually been in LA for a while. And I went to college, I went to law school. And then after law school, I went to law school in New York at Columbia. And then, but I didn't want to do the New York lawyer thing or the DC lawyer thing. I thought LA law would be more chill, and my brothers were there. So I came out to LA, and I've been here since 2000, which is crazy. But that's what got me out here. And then I fell in love and got married, and now I have my kids and I'm here.
Yeah, that's over 20 years, right?
I know.
That's a whole journey right there. I guess the question is like,
I lived here longer than anywhere else now, but
so you went to LA for law, but you ended up in real estate, or is it real estate law? How did you transition from that point to this point now, this part of your journey?
That's a great question, because, real estate was never anything that I grew up knowing anything about, or entrepreneurship. I was always like, if you want to be successful, you're going to be a doctor, lawyer, professor, engineer. Like that was what success was in our house. And of those choices, I was like, I guess I'm not as into the math and sciences, so law. Like that's kind of how I ended up in law school. It wasn't like I love the law, I'm passionate about that. It was just like it felt like the least bad option. And so I went into law. I was miserable as a lawyer. I didn't like law school, but that would be better when I'm a lawyer. And then I became a lawyer. Well, maybe it'll be better when I'm a partner. And then I was like, no.
What law did you
I was
get
a
into?
corporate litigator. And I was just long hours and a lot of, it just felt like I was, it was mostly like one large corporation be suing another large corporation and then there'd be billions of dollars at stake, but it didn't feel that important. And in terms of like, I was like, okay, well, this corporation will be richer or this one, but it's not like, it was not a good fit. I mean, I'll give you an idea of how miserable I was. I mean, at one point, I was having this excruciating abdominal pain. Like my body tells me when things are off, and I had been having like stomach pains, and it was like stress, but then it just got so bad. I ended up in the ER, and when the doctor told me that my appendix had ruptured, and I would be in the hospital for several days. I ended up being in the hospital for 9 days. And he said, I have at least 30 days afterwards to recover at home. My first thought when he told me that was, oh, thank God I don't have to go to work for at least 30 days. And then my next thought was like, oh, that's bad, right? Like I didn't know how miserable I was until that moment. Like if a life-threatening, excruciating illness is better than being in the office, like it's a problem. But I had done, everything right and followed the path exactly. Like college, at law school, the big firm, partnership track. Like I was doing all the things I'd been told would make me super happy and successful, except I was super miserable. And so I had to figure out another path, which definitely wasn't a straight path. I thought, well, maybe it's this firm. So it was like different firms. I went abroad for a year as a visiting scholar. I did a lot of different things. And with the real estate, though, I fell into by accident, because the only thing I'd been taught about real estate was that at some point you should buy your own house. Like you get a job, you buy a house, like you work until you're 65, 70, you're always trading your time for money, but maybe you put some in your retirement account, but you work until you're 65, 70, then you get a gold watch, you go play golf until you die. Like that was like the path. And so I was working, and then I thought, okay, I guess it's time to buy that house. I was in another law firm. I still wasn't particularly happy. I wasn't as unhappy. Like, I didn't prefer a hospital bed. That like I wasn't there, but I was still like on a scale of 1 to 10, 10 being deliriously happy. When I was at the job where I got my appendicitis, I was maybe like a 2, on the scale. Then at that point, I was maybe like a 5. I still wasn't like, it was, like a little bit old, not particularly happy. But I was like, okay, I guess it's time to buy a house. And LA is so expensive. So this was back in 2005, and a starter home in a semi-decent neighborhood, not a Beverly Hills or Bel Air, just like a house in a neighborhood where you were not likely to have a drive-by shooting kind of place, was upwards of $500,000, $600,000. And I was making, I think at the time, it maybe like 135, 140, something like that, thousand. So it was a decent salary, but to buy a $500,000, $600,000 house was a little hard. So how I was able to do it was I bought a property that had more than one unit, and I lived in one and rented out the others, and I had tenants that were paying my mortgage, And then when I met my husband, he had a duplex too. And I still didn't think of it as a way to get out of law. I just, was just like, okay, well, we have these properties, and in LA, things don't cash flow. So we had properties, but they weren't like really making money. Like they were just sort of covering themselves. And what happened though was I got married in 2007, and then the beginning of 2008, I was pregnant, and I was about 5 months pregnant, and my boss called me into his office. I thought I was going to get, I was working in a small firm, and I thought I would get a bonus because I've been working so hard. And he called me in. It was like the week after I told him I was pregnant, and he fired me. So, which was quite a shock, totally unexpected. And it ended up being this really big gift. Didn't feel like a gift at the time, felt really horrid, but it ended up being a gift because I thought, I'm pregnant. I don't think anyone's going to hire me at this point. I'm going to wait until after I give birth. I have a short maternity period, then I'll look for another job. Well, my daughter was born in late August of 2008. Within a month after her birth, the economy went into free fall. The job market disappeared. It was a terrible time to find a new job. And like my husband was working as a self-employed graphic designer. His business went down 90%. It was a really tough time. But we had the real estate. So we were able to sell one of the duplexes, and we used that money and started buying houses when they were on sale. We started to flip, and then we were flipping houses. And then eventually, 2015, I learned about bringing groups of investors together to purchase larger properties. And then we started to do that. And I just, as miserable as I was as a, lawyer, this was like total 180. Like that was like, this feels like a 10. I loved it. I love it. And I think I can appreciate it now because I was so miserable before. Like now I have so much gratitude for just, being able to love my life and love what I do. And so that's how I got into real estate. It became my business full time.
Wow. Monick, quick question. I know that I kind of had to do my little research, and at one point you stopped, you also did life alchemy. And I know that you also, I got to go all the way back. Was that also in a pivotal stage where you were searching to see what could you do because of how you felt and you wanted to give back? And how does that connect with what you do with the real estate by also teaching women as well?
Yeah. Oh, you went way back. Okay. So 2009, I find myself with a newborn and unemployed with a market with like a crazy economy, right? And I never enjoyed being a lawyer, but I always had this desire to help. And I became a coach, and I was always fascinated with like success and learning and, what what actually causes people to be happy and successful. I'd been fascinated by that. And I was always learning and studying personal development, probably since I was 18. And at this point, I think I'm 30, I was in my early 30s. And so I did a coaching. I did a coaching certification, learned to become a coach. And I had this talent to do life alchemy school, to just like do classes and help people live their best lives, like transform into lives that were golden, abundant, full of love and joy. And so that what was life alchemy. Then under that, I just kept getting, I had a pretty big abundance shift when I was doing this. So I'd been making money as a lawyer, not a decent salary, but when I left, and my husband had his business go way down, and this is actually before we sold one of the properties we started flipping. Like we were in a bad financial shape. We got $60,000 in debt. The money wasn't coming in. I think I had taken out my 401k, paid penalty. It was just like it was bad. And I started to just study about money and money. I actually did a money mastery certification, money mastery coaching certification, became certified in that. And I just started doing all this work around money, my money mindset, and like my relationship with money. And one of the biggest shifts was doing, I started to have to show up differently to money. So before I was kind of a money avoider. I didn't want to, growing up, money was always super stressful in my house. I just remember it'd be like a time to pay bills and my parents would be at a table screaming, right? There would be there'd be fights and I was just like, ooh, I don't want to deal with that. Money's not fun to deal with. It makes people angry and I don't like that. So I would just I would make money as a lawyer, but the bills would come. I wouldn't pay them until I got that next bill with the overdue. And I was always paying late fees and always I just was, because I was not dealing with it until it was just sort of slapping me in the face. Or I would spend too much. I just didn't pay attention. So I would overdraft in my bank account all the time. I was just a mess. I was a mess. So partly I actually had started trying to clean that up when I got engaged, because my husband, I was about to get married and my husband had 2 kids from a previous marriage. And I just knew okay, it's okay for me maybe to live in this financial chaos. I cannot bring this to my poor hubby and his kids. And I know that's one of the biggest reasons people get divorced. And I was I'm not doing this to them. I need to figure this out. I need to clean this up. So I started just doing a lot of work around myself and money. And, so 2009, or I'm sort of at we're at the bottom here, with our debt, and maybe it's even up to 2010. So I hear somebody in my spiritual center, they had this woman come in and speak, and she was talking about, the relationship with money. And it's what was your relationship like? I realized I was abusive, or, I was just I have a terror. If money and I have a relationship, I'm abusive to it. And what if I showed up really lovingly and with gratitude, and how that would change? And so I started having weekly money dates with my husband. We'd show up in a really good state, be very grateful for, as we paid our bills, and everything I wrote, it's every check, I was like, I give thanks that this amount of money is but a symbol of the inexhaustible supply of the universe, and 10 times as much as is now on its way to me and manifest quickly in perfect ways. Sure, everybody would, all the lenders probably, or bill, like whoever's getting my bills would go like, okay, they'd see this message. And I wrote that on everything. And money that came in, I would say that. Money that went out, I would say that. And it was just really in this, like, let me shift my energy around money. And in 6 weeks of doing that, we went from 60,000 in debt to having 600,000 in the bank, because we, then it like came, like somebody wanted to buy one of the properties. And then all of a sudden we had like, it was just like complete reversal, and we were able to start flipping, and all this, like, it just became very abundant as I shifted my relationship around money. So, and that's a really long way of saying, so as I'm going like through, I'm doing this life alchemy school, and the people are asking me like, can you talk about money? Can you, can you do a coaching or workshop or thing about money? And I started doing something called money alchemy. And then I was, became an abundance coach, money and abundance coach for women. So I was doing the real estate, and then I was doing this, this money work with women on the side. And then January 2016, I'm at this conference, to my first big real estate conference, to learn how to bring groups of investors together to purchase larger properties. And I'm at this real estate conference, and I'm at the hotel gym, like the morning after the conference. I'm on the elliptical machine. I'm thinking back on this conference. And I'm thinking back on that room that had 120 people in it, maybe 8 were women. And then it just came as this divine download, like, bring women into this room. Like, real estate is such a beautiful way to help women around money and abundance. All the challenges that women have, when they're making less income than men, when they're penalized in their careers when they take time off to have kids or take care of other loved ones, when they're all of this, when we have a huge gender net worth gap because of we don't own. And for so many years, the laws like prevented us or got in our way of having his own property. And it just came as a divine download, like, bring women into this room, help 1 million women create financial freedom through real estate investing. Now, it was almost like God said, this is your mission. Should you choose to accept it? And I was like, yeah, I just got this whole body. Yes. I had no idea. I'm still figuring out how to do it. But I was like, okay, God, I'll do this. Just show me what my next step is. And then my next step. And that's how Life Alchemy, and then I got like Real Estate Investor Goddesses came out of that. So that was the journey from Life Alchemy School that became now Real Estate Investor Goddesses, helping women shift financially, create financial freedom, but using the vehicle of real estate.
That's amazing. That's such an evolution from, I guess what hit me the most is that a lot of times people portray, especially in this day and age, people portray like everything is going well, but then they're hit by the reality that debt starts to happen. And then they're also hit with, especially if you want to make the change, you're hit with your own kind of internalized trauma when it regards to money that you have to tackle. You can't just kind of put it to the side. You have to dive deep and reopen that box and really start thinking back about those experiences you had, especially in your own household. And a lot of it, like, I remember my aunt, I still to this day, like, for some reason, I think she tried to hide that we were not doing well, whatever it was. But as a kid, you could tell, like, your face, the way that a parent structured their face, their unhappiness, they carry it, even though they try to smile about it, but you could still feel it. And what she would do, especially when she comes home from work, because she used to work at McDonald's as a manager, she'll rip out all, not even just like take it out delicately, she'd rip out all the phones from the walls, because she didn't want to hear any calls. And at the time, I was like, why don't we kind of need people, we need to communicate, but she was really trying to duck away from creditors. That was her process to get home and to just rip it out everywhere. It's not like she's just like, man, let me take it out there. Yeah. She's like, it was very aggressive. You're like, what's going on here? And you could tell that she was really struggling with that her financial issues. And for some reason, she just never really wanted to just allow it to happen, allow that change to happen, allow those emotions to kind of rage on so you can actually start coming up with strategies and solutions to move beyond it. And to this day, she still has like money issues because of it.
Yeah.
And I just wanted to drop my aunt's story there for no reason. Like,
I can resonate, but what you resist persists. And, it's like not dealing with it does not make it go away. Like, just makes it worse.
Yeah, I have a string of questions for you. I do have a string of questions for you in regards to this, because you've gone into the whole real estate investing side, but there's differences in real estate investing that I think that audience could benefit from understanding. Wise, because are you doing real estate investing for cash? Are you doing the flips, or what exactly are you doing with the real estate investing and the strategy that you and your husband are using?
Yeah, so we are not flipping anymore. Right now we're cash flow. We're trying to get cash flow. And we had started out doing flips in part because I think that's all we knew. Like we didn't know what we didn't know. When I thought of real estate investing, I thought of those shows on the HGTV, right? It's like flip or flop or this. So I was like, okay, well, so let's flip. I think if I had to do it over again, I would, knowing what I now know, I definitely would have done things differently. But when you know better, you do better. But at the time, that was all we knew. And all we knew too was to invest where you lived. It wasn't until I met a mentor, he said, live where you want to live, invest where the numbers make sense. And I was like, oh, you mean you don't have to invest where you can drive to your property, touch it? So man, I didn't realize that was a thing. And LA was not a great market for cash flowing, and it's so expensive and very, very, very tenant friendly. It's not the easiest place to invest. But so once I knew better, I started to shift. And so now we're doing more commercial properties, apartment buildings, or a lot of industrial, and we are primarily about cash flow.
Is that mainly that's outside of LA, the portfolio?
Yes. Yeah. We're in 13 different states, mostly in the South and Southeast.
Yeah, I think that's where a lot of people settled into where the deals were, especially away from those like really high cost of living hubs. I think that's where a lot of people started getting their start. Like when I hear about Bigger Pockets, like that podcast that they have as well, that's a lot of those people tend to be in that neighborhood of the South where the homes were cheap. And maybe there's a strategy there. Can you tell us a little bit? Because I know there's some people listening and they want to get into this space of real estate investing, but they don't know that there's a strategy and maybe even a calculation that you have to run into before you purchase a home. So how do you kind of, without giving all your secrets, evaluate what a good deal is so that people just jump into this thing face first?
Right. Well, that so depends on what it is you're buying. Is it a single family? Is it an apartment building? Is it a factory? Like we do a lot of sale leaseback. So all of those are different calculations in terms of what makes sense, what returns. I think when you're deciding what to do, I teach this wealthy formula to my goddesses. So the W, that's the part it's womanly. It's for the women. Like, how do you do this in a feminine way? Because we're not just smaller, less hairy men.
and I'm going to write this down because I'm like, W, let's go. Taking these notes.
So that's the part that applies to the ladies, right? Because we're chromosomally different. Our brains are wired differently, and that affects how we show up to money and investing differently from men. And so we can't like man up, muscle through, like no pain, no gain. For women, we don't do well when we try to muscle through for its pleasure. So it's a pleasure, it's intuition, sisterhood, and mindset work. So that's the W part. The E has to do with education, and because making sure that you get that education with real estate, because it's not like what you don't know can hurt you. And also what you know as Mark Twain's like, what you don't know, it's not what you don't know that'll hurt you. It's what you know for sure that just ain't true. I think what you don't know will hurt you too, but it's those myths that we have that limit us. So like I believed that I had to invest where I lived. It was very limited until I found out, I don't have to like stay in LA. And the year I found that out, I went from having 2 doors to over 1,000 doors. Like just, it was really, I was able to scale super big. And also when I learned I could bring groups of investors together, I wasn't limited to my own capital and credit. So this education piece, that's the next one. A has to do with assets. So there are so many different types of real estate. So assets is 3 things. It's asset types. It's not just single family homes. It's not just or apartments. There's also retail and industrial and land and self-storage or hotels. Like there are a lot of different things that you can invest in. Anything that's out there, right? Medical office, medical buildings, any building or any land, anything out there, somebody owns it. So you can invest in that asset type. And then there are asset strategies. So how do you do it? So flipping is a strategy. Buy and hold is a different strategy. Wholesaling, which is essentially flipping the contract, is a strategy. Ground up development is a strategy. Investing in the notes, like that's the debt, is a strategy. Investing in tax liens. There are a lot of different ways that you, being a private money lender, like not even investing in the prop, but lending to somebody who's going to do the work. So all of those are different strategies for investing in real estate, and all the different strategies and the assets has different criteria, right, that you'll use for assessing the deal. And then asset protection, which is how do you structure things so that you get to keep what you make. Partly asset protection has to do with the tax and also liability, legal liability, because we live in a very litigious culture. So how do you set things up? Do you put things in your own name? Do you put in an LLC, corporation, limited partnership? What kind of insurance do you get? Types of things. All right. So that's A. L is location. And so we were talking a little bit about like my not doing it in California or LA, where it's very expensive, also very tenant friendly. It's great when you're a tenant, not so great when you're a landlord. So what do you look for? So I have like 7 main criteria I look at when I'm looking at markets. And it'll differ a little bit if I'm looking at an industrial property versus like a residential, but it's like criteria for a market that's more likely to be successful, because where your property is located is a lot more important than the property itself. And then T has to do with the team. Who is real estate definitely a team sport. You don't do this alone. You need your realtors and lenders, insurance agents, attorneys, CPAs, property managers, contractors, insurance agents. Right, there are a lot of people that you need on your team. So having the right team. And then H is how you pay. So we're not limited to our own capital and credit necessarily, but there are, the different ways of paying for a property, financing it, everything from buying it all cash to having a conventional bank lend you money, to hard money lending, private money lending, seller financing, and then joint venturing or syndication, partnering with other people, essentially crowdfunding real estate. So there are a lot of different ways to pay, many of which don't require any of your own money. So, and then the last letter is Y, stands for you, because real estate investing is not one size fits all. And, how do you create a plan that makes the most sense for your ultimate goal? Where do you want to go? How you want to be in this game? Because there are so many different ways of playing in real estate. So that the how of it, what resources that you can bring to the game. You're never limited by your own resources. You can always partner with other people that have what you're lacking, but you need to know where you are, what you got that you can bring to the table. And then creativity, so that you can bridge the gap between where you are and where you want to go. And that creativity and experience and education. So that's the wealthy formula that we go through and I teach in my program. And so it's not that easy for me. Like, here's the formula that you use. This is the thing, this is how you assess whether, and it's like, okay, if you're going to, buy a single family house that you're going to buy and hold, like, there are certain formulas that you can look at that will help you determine, there's certain like rules of thumb, but, there are a lot of variables that will shift depending on what you're doing and how.
Oh, thank you for that breakdown. 'Cause I actually appreciate the fact that you took your time explaining the different ideals behind it, because it's always easy on social media to hear, hey, do this, go buy a home, and it's going to work out for you. It's a little too fast, and it's not as in depth as it needs to be, because there are levels to the strategies that you're going to incorporate, and it's going to be different for everybody. With inflation up, right? We have inflation, 40-year high. We also have mortgage rates up because the Federal Reserve is trying to combat high inflation by raising interest rates. So they're doing that. So in this situation, going to 2020, and people are panicking here and there, and you see it all over social media. Yet again, that's the only place where I live. At the end of the day, it seems that people are afraid. What do you think? Are there deals still available out there in 2022, 2023? Is there a way that somebody can even buy a home? Just regular person, Joe Smo, not an investor, can they even buy a home in this day and age?
Yeah, of course, absolutely, you can. But as interest rates go up, that does mean that your buying power goes down if you're going to use a loan, right? So when the rates are 3% versus 7.5%, it just means that your monthly payment is a lot more. That affects your debt to income ratio. That affects what you can afford. So I was just helping my parents buy property, which at the 6 months ago, when we were at the beginning of the process, their budget was like $950,000. By the end, their budget became $650,000 because of the way the interest rates went. And so it doesn't mean that you can't find properties. It means that what you can afford will shift. That also means, though, that the prices on properties are very likely going to come down, because when it becomes less affordable and less competitive, then prices come down accordingly generally with real estate. So then you're going to see that more too in the more expensive areas. But there are always deals. There are always deals to be had, and you can negotiate down accordingly, just offer less. But I think it's always you can always get real estate, but you're just not going to have you're just going to have to adjust your budget.
I can't wait till these prices go down and some people struggle, so I can come in and buy.
Just shady all the time.
I thought it might be shady. I need to get a new home.
If you have cash, you're in a good position. So people, smart people have been like hoarding their cash, waiting for this moment. So you can do it still.
So speaking of, waiting for the, I guess, best opportunity to purchase, there is a conversation flowing around now that people are, back then it was a theme. People were really high in demand purchasing homes since interest rates were very low. So where do you fall on home ownership in general? Because now the conversation is people are leaning more towards renting than owning a home, because some may feel like they are priced out of home ownership. So where do you stand and why?
Good question. Well, I am a big fan of people having cash flowing assets, like focusing on building up cash flow. And I remember having a mentor who owned, you know, thousands of doors, but did not own his own home for where he was renting his house, and that he just had cash flowing real estate. He owned a lot of real estate, but his home was a rental. And so I think that we're, it's part of like that rich dad, poor dad thing. We're often taught to buy liabilities, right? And liability in that sense is something that takes money out of your pocket every month, as opposed to something that puts money into your pocket, which is an asset. So our home, unless we're, renting out part of it. So when I bought my house, it was a asset because I had tenants that were paying me rent, and so it was an asset. But I didn't go into it thinking to have an asset. I didn't know better. I just sort of lucked, like that was the only way I could do it. I went, because otherwise I just would have gotten a liability, because that's what I'm taught, right? Like you have a house, right? That you pay for, that you pay into, and that usually it'll go up in value over time. But I really like, for people who want to buy their home, like people to think about, maybe you get a 2 to 4 unit initially. So you live in one unit, you rent out the other ones, and then you have these tenants that are helping you pay, helping you build wealth and create income streams. One of the things that I discovered, when I was in my financial crisis after the crash of 2008, it was devastating for me. And there were times when I wasn't like suicidal, but I remember thinking very, very longingly about my life insurance, and it was like my $1 million life insurance policy. And if I could have found a way that my family could get that, I probably would have taken my life. But I knew that it wouldn't work if I had a suicide. But that's how devastating it was. And people in dire financial situations are actually 20 times more likely to commit suicide. But what I realized since, like, because we're taught, I think of financial stability as like a table, and the streams of income are the legs of that table. And most of us are only taught to have like one leg under our table, which is our job. And if something happens to us, you get fired or you get sick or whatever, your leg comes crashing down, your table comes crashing down. And but the more legs you have under your table, and most of those legs should be passive, so then you're not trading your time for money. So when people are like, I have three jobs, right? So I have 3 legs. I'm like, okay, that's probably better than just having one. But if you can't work, there go all your legs. There goes your table. But if you have passive, like streams of income that come without you having to trade your time for money, like rent happens, or if you have, I've written some books, and then they pay out some money, right? So I have these different streams of income, right? You have these legs in your table. So if something happens, then you are, you might lose a leg or 2, and your table stays steady and strong. So I'm really about having people build legs under their table. And I think real estate's a great way to do that. But having like a house that you just live in that doesn't pay you doesn't really help that stability as much. I mean, you can, if you're able to, you can sometimes pull out equity in a house, and it's better than, than it might otherwise be. But for some people, it might make sense to rent, but use their cash to buy properties and cash flow. So That's my bias. I'm all about like, I want people to have really steady, stable tables and crisis-proof finances.
I guess my question, I find it fascinating because it seems like a lot of people did take those words from Robert Kiyosaki to heart in regards to that, in regards to just understanding what an asset versus a liability is. But I also find it fascinating that the same people also already own their homes to begin with. So it's almost like it's not the chicken the egg thing as much more as like that person already owned the home, so they have a stability or an asset that they can use to leverage to buy more assets versus the new person coming in. Let's say they're 20 now, out the gate, and they're getting the information like rent first. They don't have any assets at all, and it's probably becoming more difficult for them to even buy anything. They're just basically spending majority of their wealth, that one stool or that one leg. All of that is going towards, well, at least 30% of that is going towards just living arrangements, if not 40% at this point.
Yeah. So I'm not saying that you shouldn't buy a home, but think about how can you make your home into an asset. Right. So maybe you rent out, it's like house hacking, right? That's you rent out a room, or you buy more than one unit, so that it's you're creating assets as you build. And then eventually your passive income can pay for you to have that home by yourself, right? It's just it's just a different strategy. But it also, if you're going to just rent but not buy assets, right? If it's just a matter of like just renting or buying a home to live in, then you can buy a home. That's better.
Yeah, I think that's my fear with the information. Like you're right, it's a strategy. It's something that people have to consider, think about, plan, and execute. Versus, when people get this information, they run down the streets like they told me I should just rent. That's all they do the entire time.
That is not the lesson.
That's what I heard. That's what I heard. That's like, it's like, no, that's not what she just said. Like he told you build and have a plan. And actually, no, I heard renting forever.
So build assets, buy assets.
It's just interesting how information goes around people, and some people just grab that one piece that they need to validate them having that rental. Because there was a time that I know Atlanta, part of her story, that she was renting an expensive location that she was barely ever in. That was like her name, like hardly ever home was like her tagline on like social media. Pajam Lakai, like or something like that. Like, and in the end of the day, she was just spending money on this housing, whereas she eventually cut down majority of that housing and ended up being a homeowner because of it as well. So I thought that's one of those things that you just can't really duplicate. The fact that a lot of young people are really, they're paying as much as $3,000 on an apartment that they're living in, and they're not saving or investing anything.
Yeah. That's true. And especially if it's cheaper sometimes it's cheaper to own, and your mortgage might be less than your rent payment. So it totally makes sense to buy. Yeah,
it happened in my life. In the DMV as well. I purchased in 2016, the end of that. And before then, I rented in a 5-bedroom, 2-bathroom, like, I guess, place in Columbia Heights. It's hard to explain, but I guess they call those like row homes. Mm-hmm. So I was in one of those situations, and it was a lot of people there. And I paid $1,000 a month just for rent, and I think I paid an additional $250 for utilities. So I was paying that much money. Then eventually, I purchased, like a year and a half later, I ended up purchasing a home in Upper Marlboro, and the mortgage was $1,000. And I had 2 bedrooms, 2 baths on my own. Like, it's insane. I was like, I look at everybody else. You might want to live here. You might want to get your piece of this action. My mortgage is crazy. Like, I paid all my stuff. They're like, boo, I want to live where the action is. I want to live where the cool stuff is happening. And I'm like, okay. And I ended up traveling the world because of it. And while they're still kind of struggling, and they're still complaining that they can't afford a home. So it's interesting. It's a thing. I just wanted to throw shade at those haters of mine.
Constantly, this has been a thing. This is his thing. Like, I just want you to know, Monick, that he's
about
always
travel.
going back to that story
to
say that, I told you guys to buy when you had a chance.
It's true. You should. I think you should. I'm definitely not saying you like rent and instead of buying. I'm saying if you were debating, do I buy a rental property or do I buy and rent, but have use that money to buy a rental property is making me more money than I'm paying in rent, or do I like buy a multifamily where I live in one and rent out the other versus just buying a single family home that I live in? I would say consider assets, investing in assets, not just liability. But it's not one size fits all. It's not one size fits all. It's like what, and live where you want to live, invest where the numbers make sense. So I might want to live someplace where it's too expensive to buy, but I could, rent in LA, but then buy a home or two homes in Ohio. That would be like half the price of like one down payment in LA. So there are many options.
I definitely noticed that about Ohio and even Chicago at some point, in some places in Chicago, really great deals. It's insane. And I'm like, but I'm afraid to actually invest in the North because I hear about the water main to burst. You also have to make sure that the sidewalks are cleared. So if somebody trips, they can't sue you. So it's kind of a lot of crazy stuff.
Yeah, well, you can't let those fears drive. You have to.
I'm afraid.
Learn your market. You have to protect yourself, right? That's why you get insurance, and you make.
I'm more of a slumlord. I just want to have the streets the way they are. Hey, if you fall, it's on you. That's all I want to say.
So it's just, you just that's part of the game, and you just protect yourself so when things happen, and you're okay.
Well, Monick, you've been a real estate investor for quite some time now, over a decade now, and you do have a vast, amount of experience dealing with different type of real estate properties. And you've seen the evolution of just real estate and housing markets, not only in LA, but different states as well, investing in those. What do you think, how will the 2022 and next year, 2023 will be different than the 2008 housing crash? Or if it's going to be different at all?
I think it will be, but I wish I had the crystal ball to tell you exactly how it's going to be different. Because then, I'd be
rolling in more money.
Yeah. If I had the crystal ball and knew exactly where to go and what to do. I wish I'd had that crystal ball back in 2008. I would have done some different things differently. I wouldn't have flipped. I would have kept those houses. But when you know better, you do better. Anyway, so I think some of the differences between now and then is, last time there were so many people that had houses and mortgages they could not afford. So pre-2008, if you had a pulse, they would give you a mortgage. It was like the breath, like fog up the mirror test. Can you fog up this? Okay, you can have a mortgage. So there are a lot of people that had these like no income, like stated asset type like loans that they could not afford. They could barely afford. If it was like interest only, low sort of teaser interest rate with like an adjustable rate mortgage, like pops in and like year 2 or 3. And then that was like, okay, we'll just keep refinancing you. The mortgage brokers were making tons of money on these, like they were making more money on these like super risky loans than like more traditional loans. So there were all of these people that had no business owning. And then the banks just allowed all of that to go into foreclosure all at once. So the difference now is that since then they changed the law, so it is a lot harder to get a loan. And the people who own who have homes now, for the most part, can afford them. And so you don't have, and it wasn't as easy to do cash out refinances. So there's a lot of equity. So the people who have their homes, they have a lot of equity in them. They're not underwater like they were before, and they're well qualified for those loans. So that's a difference. There's another difference in terms of the supply. So I think at the time there was maybe like almost like 6 million homes on the market. So there was a huge supply of homes. Now we've had a very low supply. It has gone up a little bit, but it's still below. I think it's like around like 1.5, 2 million homes on the market. So and like to be at a normal rate, we'd want to be around 3 million. So we have a low supply. So those are big differences. So we don't have the huge supply, and we also don't have like all of these homes that are going to be flooded with like foreclosures. So as I do believe, though, as the interest rates go up, prices are going to go down. I do also think that there is a pent up demand from a lot of people that went into, from the COVID time that did the,
momentarium.
You talking refinance or PPP loans?
Not the PPP loans, but they allowed like the mortgage forbearance.
Okay.
And that, so there are a lot of people that have, that it's like that. There's a lot there that, so we'll see what happens. It's like how I think the banks are going to be a lot more judicious about this. They were burned last time when they just dumped everything, so they're not going to want to dump out a lot of these bad loans. So we'll see what happens. I think that the prices are going to come down, but I don't necessarily foresee like a crazy drop like before. But there were a lot of unprecedented things that happened in 2022. The Fed printed so much money. There's like trillions of so much more debt, national debt. I don't know how that's going to affect things. And as the interest, I don't know where they're going to go with the interest rates. They've just raised the interest rates so quickly. They've never done it as quickly as they have. I think the interest rates basically doubled in like 3 months. It's like that's never happened. So we'll see. But there's so many things that are unprecedented. But it's the underlying conditions are very different than what happened in 2008. So I don't foresee it necessarily. I don't foresee it doing that.
I'm just going to drop this. I think the Federal Reserve Chairman he spoke about this at the very beginning, but nobody was paying attention. That he said that these level of federal rate hikes could go up as much as 23 times. So that's the anticipated, because it was that high in the late 70s and early 80s, and it took about 24 kind of like Federal Reserve decisions to kind of get it back to where it's supposed to be. On top of that, that was just like his warning. That's going to be a while. On top of that, he's also mentioned that once they get to a certain amount, it's actually going to hold. So I think through 2023, we're going to see that the interest rates is just going to hold the entire way through. It might even hold through mid of 2024. So I don't anticipate that, in my opinion, ever changing for a while. And you're also right on it as well, Monique, in regards to like people learn, in my opinion, they learned a lesson from 2008. That a lot of people haven't noticed. Like the people that ended up holding something, right? You ended up still being in the game. You've learned the valuable lesson that prices always come back up again. That means in this situation, no matter if the prices go down, I don't care if the price went down 40%. People that learned that lesson from 2008 going to keep their homes, and they're going to also see opportunities to buy other homes. The people that really lost out are the people that were at the bottom tier, or especially Black and brown people in 2008, 2009, they lost a lot of homes, and a lot of homes that they did hold did not actually come back in value as fast as other areas. So there's a lot of issues there. So we're going to probably see I don't want to say near catastrophe, especially for Black wealth in 2023, if we go into another recession again, because the pandemic wasn't a nice thing for Black wealth, and it's not going to be another nice thing for Black wealth if we go into a recession. So it's going to be interesting going to the late 2023. We're going to get new numbers in regards to wealth, and I'm I'm telling people now, like I tell people all the time, it's going to be really bad. And you're going to really see that the wealth gap going to increase tremendously. So just me tossing that out.
We'll see. I think people can afford the loans they have in a way that they couldn't back then. So I don't know, because once you have a fixed interest rate, and a lot of people have very low rate mortgages. I mean, people who are getting them now are, it's a lot higher, but so many people have refinanced. Their rates are below 4%. And if they can maintain their mortgage payment, then they should be okay.
And that's my pushback. I think that's my interesting pushback there. Because I think it's not just the fact of maintaining, especially you have a lot of people that are going into retirement with on average around $150,000 worth of mortgage loans or debt. A lot of times they've actually been refinancing, to your point, throughout this process for years on end, where they should have been paid off the house a long time ago. They bought a home in the 80s, and they still have the home in the loan today, which is wild. And I think that's going to be the Achilles heel, or the straw that broke the camel's back in this one, is the fact that some people will have to sell their homes, at whatever rate it's going to be in order for them to actually have income. So they're going to sell and they're going to go into renting. But that's just a theory that I have, just a theory.
Yeah, we'll see. We'll see who's right. And then also with the interest rates, the employment, the unemployment that's going to be an interesting. It's like a counterbalance, right? Because I know there've been some layoffs recently, but there's still something like 11 million unfilled jobs in this country, and not nearly enough people looking for jobs as there are jobs out there. So with such low unemployment, because normally with a recession you have high unemployment, and then that affects it. But we have very low unemployment, and people a lot of the employers have to pay more to employees to get them in and keep them. So that keeps upward pressure on the inflation, even as you have the interest rates rising. So it's a lot going on. I wish I had that crystal ball to tell you this is what's going to go on, this is what's going to happen. But I think, we'll just see. But I think I will agree with you that a lot of Black and brown people were going to be disproportionately affected by the downturns, especially those of us who don't own any property. Rents are going up a lot, and it's harder, and it's going to be harder to get into the game.
I'm curious, what is the average rent in LA, like a 2-bedroom or something?
Oh, I don't have that off the top of my head. I think, I don't know. You can look it up. Because I don't really have a lot of rent.
She's like, I don't rent these things. I buy investments properties. Let's go.
So I think the average rents, it's about it's a 2-bedroom. In this area, said $49.75 on the west side of Los Angeles.
Oh, that hurts. It's about $5,000.
$5,000?
Close to $5. Yeah, that's $5,000 if you start adding utilities or anything like that. That's a good $5,000.
It's pricey.
That's insanity.
Yeah, I saw this crazy, so a lot of people are moving, but I think it was if you move from LA to Jacksonville, Florida, your cost of living would go down to 66%. Something like that. It's a very expensive cost of living here.
That's incredible. So how do you retain any level, and maybe that's more of a demographics question, but how do you retain people at lower incomes to work, any jobs, like day-to-day jobs, even from transportation to your coffee shop, so on and so forth, if this area doesn't even allow them to live here? Where do people live then? If they can't afford $5,000 for a 2-2, that's insane.
That is a good question. And it's hard to, I mean, there's very strong rent control here. And so once people are in, they can, it doesn't like, usually it's like a 3%. You can only increase rents by 3% a year. For the past couple of years, you haven't been able to increase them at all. But usually you can't do it more than 3%. Unless, so if it's a new person coming in, yeah, it's tough. I mean, I'm always like, I don't know how people do it. I don't know how people buy here. I don't know how, it's like, how does that happen? It's very, very pricey.
Wow, that's incredible. And thanks for all your shares on this, because it's going to be very important for people to listen, tune in, and kind of start like framing their mind, especially if you're not a homeowner right now or not an investor, that you really want to get on the ball and kind of change the trajectory of your own wealth. Because if you're not driving this car of your own life, like who is exactly, like who's actually at the wheel? So I think that's the biggest issue that we're dealing with, especially as people coming into any form of wealth. Like you got to get in the driver's seat and you got to know where you're going.
Absolutely.
Before we let you go and wrap up the episode, any last things or advice you want to give to either investors who are currently investing or who are homeowners, or someone but potentially may want to get into investing?
And the advice I want to give is just focus on building those legs, those streams of passive income, right? However you can. And it's like real estate, I think it's like obviously biased towards real estate, but stocks or anything like dividend paying stocks, things that will just create cash flow for you. Because the more of that you can create, the more security you'll have. And as you know, when the things go, like markets go up and down, and you want to have those legs to keep you steady and stable, especially for like Black and brown people. There's such a huge wealth gap, and I think that which is like what you own minus what you owe. And I personally believe that real estate is one of the best ways to erase that gap. And so do what you can to learn how to get invested and having those streams of passive cash flow come in for you.
Lawrence looking at me. I'm looking at him. About you.
I am, because I'm like, I'm good. I'm like, I the moment she landed there, I was like, you know what? I need some cash flow in my life, because it's only so far, because we were kind of a little bit different at one point. I have my income, my wife have her income. She had a side hustle, she don't have it no more. I do a little bit of consulting. We do have a little rental income, but it's not enough to even add. So it's kind of, I'm gonna take that back out. So I'm still at 3-ish, 2.5-ish, and it's just not comfortable enough for me. I think I definitely need to work on increasing cash flow. I do have investments that pay dividends, but that's still nothing. I can't count those as like a thing.
It all counts, but just
it counts. But
adding more to that.
I'm gonna need that thing to get like to $1,000, $2,000 for me. Like, okay, I have a cash flow that actually happens. Yeah. I think some people oversell the idea of cash flow. It's like, I'm cash flowing at $100 a month. I'm like, it's $100 a month. You could have just relaxed at that rate.
No, but that's $100 more. That's $1,200 a year. Oh, then that's like over.
And then I asked my buddy, hey, how much expenses he had? He's like, what expenses? I'm like, what? Like, he doesn't do the math. In his mind, he only sees the positives, but he doesn't see the negatives.
He doesn't see like the net cash flow. Yes.
Yeah. And I asked him about that. What's about the net? He's like, what is the net? Like,
How much do you get to keep after your expenses?
I had to explain that to him a few times. He still didn't get it until he finally got the bill.
Yeah. But yeah, I think if I can get people just thinking about that and creating that for themselves, like that's it. That's what we need to do. Because if you have enough passive cash flow that it equals or exceeds your expenses, then that is financial freedom. Then you work because you want to, not because you have to. And then you got your stuff covered. Anything happens, like you don't have to trade your time for money anymore. Like, everything's handled. Like that's where I want us all to be.
Awesome. Well, Monique, thank you so much for being on the podcast today. This has just been a wealth of knowledge, all the information you share with our listeners. Can you tell our listener where can they find you? Because I know that you do have a podcast, but you have been doing other things as well. Because you mentioned you are our coach with Real Estate Investor for Goddesses as well.
Yeah. So the best place to reach me is to go to my website, www.reigoddesses.com. So REI for Real Estate Investor Goddesses.com. And there you can, there's my podcast is there, and we're at REI Goddesses on most of the socials.
Sorry, I was writing notes. I was Lawrence like unprofessional.
Stay professional. Stay professional.
Well, thank you.
Great. It's been so fun.
No, this has been fun as well. And I just really hope the listener take your story and just the information that you have shared with us about potentially becoming a real estate investor or just getting into the market of owning, right? Because it does make a lot of sense when you are not stable enough, when you're only relying on one income. And that's something I think about constantly. Like, if something happens tomorrow, like, is my, job going to let me go? Like these are the things that you kind of think about constantly. If you're a homeowner, if you're a renter, if you have family members, dependents that solely rely on you. So that is really good to think about for future opportunities, especially with the recession, everything is just increasing. So this is really good information. I thank you again for tuning in. You can find me, Atlanta, on IG at Atlanta_Elson, as well as on YouTube. Hit that like and subscribe. Yes, I'm still begging for subscribers out here. LG, where can I find you?
Well, definitely not on YouTube. I'm on social media and the IG, or even I do have a website called The Neighborhood Finance Guy. If you misspell it, I don't know where you're going to end up. So if you spell it correctly, The Neighborhood Finance Guy. Hey, that's just, can I not just rock out? Can I not do what I do? In the end of the day, unlike somebody that says she has a YouTube that she posts once a year, I actually do not have a YouTube, so you cannot find me. I'll pass it over to Lovely if she's actually here or she's just doing her divas thing. Do we have to pay a secretary for you, Lovely?
No, I am here. And, this is very shady comments towards the end of this conversation, like the beginning. So you can find me at Lovely Mardellis at LinkedIn and Instagram. Those are the two places that I am right now, just relaxing. But Monique, your story was really inspiring. Took a lot of notes. I really like your breakdowns, your acronyms. So we really appreciate you coming here and sharing your thoughts. And I hope the audience takes away some powerful things that they can actually use, practical things to start moving forward in their own lives.
Thank you all so much. This was a pleasure. Merci un peu.
Hey.
She was waiting to say something Creole. She was waiting.
My Creole.
I do not speak Creole. I do not speak Creole here.
Libyan. Well, thank you guys for tuning in. Once again, TFG, we're out.
Thank you for listening to the Financial Griot podcast, powered by the Wealth Builders Collective.